Welcome back to another short segment of TA with SI. Many trades with hope and prayers. If that is you, next 2 to 3 minutes will give you the leverage to understand the market better. Because we will be looking at 4 candlestick patterns which are often confusing, right? This process we are looking at 2 bullish and 2 bearish. So here this is hammer. And then you have hanging man. That looks same, just the results from these are different. Again, you have shooting star and inverted hammer. The results when you are trading these are entirely different if you are not focused on understanding those, because they are often confusing. But today we are going to clarify how you can do this easily, because these give you the identification, right? So now let's look at that. Now first we are going to look at the hammer and the hanging man. What's the difference between them? So a hammer pattern usually happens to show you that the market is going to go higher. So that means logically it's going to be at the bottom, right? So when the price is trending lower, it's coming lower, then you are looking for the hammer pattern where it is bottoming. So in candlestick patterns, if you are putting that into perspective, that happens something like this. Say you get candles going to the downside, it is trending lower, fine, then all of a sudden close to that you actually get another candle. Now that wicks lower, agreed, but it kind of closes like this. So this one is your hanging man. Why? The price was trending to the downside and this happens here. This signals most likely you may have some consolidation here, but after that you're going to trend back higher. Whereas even though this is similar, the hanging man happens at the top of a trend. So imagine we just have this structure there and then we are trending back to the upside. So you just came down, you got the hammer, now you're moving up. So as you're moving up, imagine you are having this continuation pattern. You got this followed by the next one, you're trending higher, now you're again moving higher, and at that top you kind of actually get this one. So now that's a different story, right? You were trending higher. This is like a new high being created compared to the previous one, and then a new high. But here the highs are actually same, and then the price decides to actually come lower. But it closed higher, but the close was bearish. It's still red candle. Sellers won that fight. So they were fighting. Sellers tried to push it down, but again the buyers came back up thinking to push it back up, fine, but ultimately that candle is red. That's why it's a hanging man. So when you get this at the top, or when you are having 4, 5, 6 different candles and getting this pattern, that means you're going to go into a correction. Opposite for this one, you're getting 3, 4, 5 candles to the downside, and then you get this one. That means you're going to most likely go to the upside from here. Now next 2 is going to be the inverted hammer and the shooting star. Now, so when you're looking at the inverted hammer, even though it's bullish, it is actually showing you something similar to that of shooting star. But it's somewhat similar. The logic is similar, but what you have to understand here is you get this as a bullish identification pattern. So when I say it's bullish, again, that means either a continuation pattern or most likely it's happening at a bottom. The price is actually coming lower, price comes to the downside, it trends to the downside, and at that range, when you're coming lower, you actually get this. That means it's something similar to the hanging man, just the mirrored version. It's the upside down. So what's happening here? So in candlesticks, if we are drawing that in candlesticks for easy understanding, you actually get something like this. Okay, you are trending to the downside, you have long wicks, short wicks, whatever, the price is still trending to the downside. But at one point, the price closes in bulls, meaning green, and then you have long wick to the upside. That means even though we were trending to the downside, buyers tried to push it up, and then eventually sellers pushed it back down, but the buyers won the game. They closed it in green. So that shows you we are going to go to the upside from here. Potentially you may have another couple of candles inside this pattern and then go up, or sometimes you may directly get another candle like this, which turns as a pattern here. You get that easily. So that's inverted hammer. Now for the same, if you are actually looking at the shooting star, what happens? Same stuff upside down. The price is going bearish, but it's the same stuff happening at the top. The price is moving to the upside, and then in this region you happen to actually get this one candle with a long wick to the upside. Now the dynamics you can say is like, okay, the price went higher, so you can still have a chance, but the catch here is who won that? Sellers or buyers? Here the sellers won the game. So even though buyers were pushing the price up till this point, you can actually see that at that particular range you actually got this one. So even though you made this, fine, you got this structure, you're moving up, then you get this at the top. So close to the top, when you get this one, it's clear you are going to the downside. Now these are kind of basics. If you liked this short TA segment and you want to watch another one, look at this video. Or else if you want to look for a long technical, fundamental and current affairs analysis, you can look at this video. So that's it for now, guys. Bye-bye.